This video is created by Jagrat Creations. It is useful to the students who are reading for 11 Commerce, CA Intermediate, ICWAI Executive, CS Executive or BCom or CA-IPCC. As I want to solve one sum from a chapter, single entry capital comparison method. Just observe the sum on the screen that we intend to learn. This is the sum that I wish to explain and solve here before you. Shri Aditya keeps his books of accounts as per single entry system. Particulars regarding his assets and liabilities are as under. As on 31/3/2015 and 31/3/2016 you are given. These are the assets and liabilities given to you. On 1st of January 2016, Aditya brought his personal furniture for 10,000 and cash 10,000 in the firm. So this is the additional capital brought by Aditya on 1st of January 2016. So before the end of the year, 3 months before that, this additional capital is brought by Aditya. Aditya has taken away goods for 2,000 for his personal use. Monthly cash drawings of Aditya amounted to 2,000. Land and building and furniture are to be depreciated at the rate of 10%. Interest on capital is to be calculated at the rate of 10%. Bad debt reserve is to be provided at 5%. The adjustment effects are to be given for the interest received on investment for the whole year. So on this government securities, you are required to give the effect of interest. From the above information, prepare opening statement of affairs, prepare closing statement of affairs, statement showing the profit or loss and the balance sheet as at the end of the accounting period. This is what we intend to prepare. Now see, this is a sum on single entry capital comparison method. The other name is net worth method. What is to be done in this type of sum? First, find out opening capital or capital at the beginning of the accounting period by preparing opening statement of affairs. Step 2, prepare closing statement of affairs and find the closing capital. Then prepare capital comparison statement considering drawings and additional capital brought by the proprietor and find out the gross profit. Then give the effect of adjustment to the gross profit, and in light of that, closing statement of affairs is to be revised and converted into balance sheet. This is the strategy that we follow for the purpose of solving the sum. Now let us start. These are the details for the purpose of preparing statement of affairs. From 4th onwards are the adjustments. So these are the adjustments that will be considered, and the effect of this adjustment will be given to the gross profit that we work out by capital comparison method, and second effect of this adjustment will be given to the relevant assets and the liabilities given in the closing statement of affairs, and the remaining details of closing statement of affairs for which no adjustments are required, they will be copied in the closing balance sheet, and we shall try to tally the closing balance sheet at the end of the accounting period. Now see, first I prepare, as I told you, I will prepare opening statement of affairs. For this, opening balances are going to be considered. Land and building will appear on the asset side, furniture on asset side, debtors on assets, stock on asset side, then debtors on the asset side, then comes creditors, obligation, liability side. This is cash balance, prepaid insurance and bank balance. Bank balance 40,000, prepaid insurance 1,400. Then comes government securities, unpaid salary and government securities. Unpaid salary will appear on the liability side, and government security 9,600 will appear on the asset side. Now total of assets minus total of liability, you will get the opening capital. Now prepare closing statement of affairs. Land and building on asset side, then furniture, then stock, then comes debtors. Creditors will go on the liability side, cash balance asset side, then bank balance also on the asset side, prepaid insurance, unpaid salary, liability side, 14% government security. Now, this is how opening and closing balances are given to you. In light of that, we have prepared statement of affairs. Find the closing capital. So total of assets minus liabilities. So 2,48,000 is the closing capital. Now after doing these things, I should prepare a capital comparison statement on the basis of understanding that opening capital plus additional capital minus drawings means withdrawal of capital, plus if you add profit, then you will get the closing balance of capital. So if you make profit as a subject of equation, then profit is equal to closing capital, drawings are transferred to opposite side, so plus drawings, opening capital and additional capital are also transferred to the opposite side, so it is deducted. In light of this formula, I want to find out the profit, so closing capital plus drawings minus additional capital minus opening capital. This is the formula on the basis of which the profit is being found out. The profit is subject to adjustment. After adjustment, I shall find out the net profit. Now, closing capital, opening capital. Now let us consider the information given to us. On 1/1/2016, Aditya brought his personal furniture worth 10,000. Now see, here the furniture opening balance is 20,000. Aditya has brought 10,000, so furniture balance is 30,000. So it agrees. No need to add once again because it is already added. And cash 10,000 in the firm. So additional capital brought. So additional capital effect will be given in the capital comparison statement. So furniture and cash brought as additional capital. So total additional capital brought works out to be 20,000. Aditya has taken the goods of 2,000 for personal use, that is drawings 2,000. And monthly cash drawings of Aditya 2,000 per month. So 2,000 into 12, 24,000 are the drawings. So total drawings are 26,000. Closing capital plus drawings minus additional capital and opening capital, you get a gross profit of 54,000. Now this gross profit 54,000 is subject to adjustments, and let us consider the adjustment. Now these are the adjustments that I am going to consider. This closing statement of affairs, the assets and liabilities are given. The effects of this adjustment will be given to the relevant items of assets and liabilities. And in light of that, I'll prepare the closing balance sheet. So let me make arrangement for all these things. This is the balance sheet that I want to prepare. Land and building depreciated at the rate of 10%. So opening balance of land and building is 1 lakh, closing balance is 1,40,000. On what date you have purchased the land and building 40,000? That is not given to me in the sum. So I can go for presumption. 1, it was purchased on the last day. Then provide depreciation only on the opening balance. Or you can say that the average period for depreciation for this additional 40,000 should be made at the rate of 6 months. The depreciation should be provided for 6 months on an average basis. That is also another presumption that you can get, that you can go for. But here I want to go for a presumption that though land and building are 1,40,000, I presume that addition has occurred on the last day of the accounting period. We assume the addition to the land and building purchased at the end of the accounting period. So depreciation will be calculated only on the opening balance. So depreciation on opening balance, 1 lakh into 10%, 10,000 deducted, and to that extent gross profit declines. So deducted from gross profit 54,000, 10,000 is deducted because of depreciation on land and building. So this is a presumption that has been made. Addition is occurred at the end of the accounting period. Now furniture is to be depreciated at the rate of 10%. Opening balance of furniture 20,000. Addition has occurred 10,000, but you are given the date for its addition. So opening balance 20,000. Addition has occurred 10,000. But the addition has occurred on 1st of January 2016. So you can calculate depreciation for 3 months. So on opening balance, depreciation is to be calculated for the whole year. Addition 10,000. On that, depreciation is to be calculated only for 3 months, that is from 1st of January 2016 to 31st of March 2016. So depreciation for 3 months, 1000 into 10% for 3 months, 250. So 2250 is the depreciation deducted from the balance of furniture. Net amount shown on the asset side, and it declines the profit, gross profit, so it is deducted from 54,000 depreciation on furniture. Next adjustment is on interest on capital. Now opening balance of capital plus additional capital brought, furniture and cash. So that additional capital is added to the capital balance. Now when you want to work out the interest on capital on opening balance, interest will be calculated for the whole year and the additional capital on which interest is to be calculated from the date on which the capital is brought till the end of the accounting period. So here I calculate interest for 3 months for the additional capital. Because the additional capital was brought on 1st of January 2016. So on opening capital, interest will be calculated for the whole year. So 2 lakhs into 10% whole year interest and additional capital 20,000 on which interest gets calculated only for 3 months. So 20,000 into 10% into 3 months, 500 is the interest. So total interest on capital that is added to the capital balance, and the interest on capital is identified as one type of financial expenses in the business. To that extent, gross profit declines. So interest on capital is added here and it is deducted from the profit 54,000. Next adjustment, bad debt reserve is to be provided at the rate of 5%. So debtors are 24,000 on which you are required to provide for bad debt reserve. Bad debt reserve is a provision made to meet with the losses on account of bad debts that may occur in the next year when we try to collect these debtors of 24,000. So 24,000 into 5%. Debtors are 24,000. 5% thereof 1,200 is a provision for bad debt reserve that is deducted from the value of debtors to show the realizable value for the debtors in the balance sheet, and to this extent it's a provision for the loss. Profit declines. So 1,200 is deducted. So the profit after deducting all these things comes out to be 20,050. You are required to give the effect of interest on investment. Now 9,000 is the purchase value, but its face value is 10,000. On 10,000 whole year interest will be calculated, 1,400. Interest is receivable, so it will appear on the balance sheet asset side, and this being income added to the profit. So my total profit will be 21,450. This 21,450 profit is added to the capital. From that you are required to deduct the drawings 26,000. So this is the closing balance of capital. Now in this balance sheet, from this compare the statement of affairs with this balance sheet. How many items have I already considered in this balance sheet? Capital, debtors, land and building, furniture and 14% government securities. What are the items of closing statement of affairs yet not considered and is not subject to change in light of any of the adjustment? All those items apparent on this statement of affairs with black color are the items of closing balance sheet not subject to adjustment, so they will be copied as it is in my closing balance sheet. Let me do that now. Copy the remaining balances. Creditors, unpaid salary, cash balance, stock on asset side, bank balance on asset side, prepaid insurance. Now have a total for the balance sheet. You will find the total on both the sides to be 2,55,550. This is how balance sheet totals agrees. Now this is a sum with good adjustments. I have tried to explain you this sum. I feel that you have followed all these things. Thanks to all of you.